Welcome to Crypto West Coast, where we discuss everything crypto from a Canadian perspective. My name's Damien. Today, I want to take a look at how the Bitcoin price fluctuated this week and reasons why. And I want to take a dive into hedging your bet regarding inflation rates rising in Canada. If you get any value of these videos, I ask you to give it a thumbs up and subscribe so that you can get notified when I create a new video. I don't make them every day, unfortunately, but when I do, you'll know when it's out. For your convenience, you can always click down below in the settings and play this at 1.5 speed so you get through it quicker, or you can use the timestamps that I've included down below. When it comes to investing in cryptocurrencies, everyone's expectations is that the prices will keep going up, and then go parabolic. But in reality, this is what we get. And on Thursday, this happened with Bitcoin. Taking a look at CoinGecko right now, the market cap of all cryptocurrencies is $1.8 trillion. It was over 2 trillion, but recently it's dropped under. And the total market cap for Bitcoin is 936 billion. So almost $1 trillion. It's fallen slightly. But look here on Thursday, if we follow the graph down, almost every graph has this drop pattern. On Thursday, April 22nd, at 10 a.m. Pacific time, the price of Bitcoin started falling until Friday morning 1 a.m. when it bottomed out, going from approximately $54,900 to $47,900, a drop of about $7,000 or a drop of 12.8% in less than 12 hours. Now, I'm always quoting US dollars when I do this because I deal mostly in US dollars whenever I'm tracking cryptocurrency. Twitter had a frenzy of reasons why the Bitcoin price suddenly dropped, and you may have heard some of them, so I'll go through a few of the top ones briefly right now. One reason cited was that Turkey all of a sudden banned cryptocurrency. Lately, the Turkish economy has been experiencing difficulties, as this news story indicates. From firing central bank governors to a currency hovering around record lows, investors are losing confidence in Turkey. And right here, debts are soaring, inflation is rising, and the currency is near record lows, raising concerns about the president's economic stewardship. But critics cited that it's unlikely that a country like Turkey could affect the global Bitcoin ecosystem. Another reason for Bitcoin's price to drop suddenly might be this article that says China's blackout and Bitcoin hash rate correction caused Bitcoin price to crash. Right here, says investigating a bit about it, it turns out that the blackout in China's Xinjiang region caused almost half of the Bitcoin network to go offline in 48 hours. This blackout was due to maintenance after the massive flooding and security issues at power stations in China. And down here, Popular Market Analysis, Willy Woo, shares that the Bitcoin hash rate and its price has been always correlated, and thus, following the blackout in Xinjiang, today's price action followed the collapse of the Bitcoin hash rate. So this may be a plausible reason why the price did drop on Thursday. Moving on to a third reason, it seems when Biden's proposal to double capital gains tax rates, the price of Bitcoin and all the assets dropped. It says here, the Biden administration has revealed plans to raise taxes on investors who are millionaires, according to a flurry of recent reports. President Joe Biden wants to overhaul the U.S. economy in order to help fund American childcare and education. Biden's proposal will almost double the current capital gains tax rate from 20% to 39.6%, and for some investors, the tax rate could be as high as 43.4%. This could very well be a reason why the price dropped, as people all of a sudden decided to sell their assets in anticipation of an increased tax rate. But critics of this would say, why would you sell your assets now? This is only a proposal and likely a highball percentage number, and it will likely settle in at a lower number in the future. So selling your assets now on a proposal seems like a silly thing to have been done. So a fourth reason, and one that I think may be a most likely scenario, is the fact of market manipulation. If Bitcoin is $1 trillion asset, there are a lot of players or whales that have a lot of money invested in Bitcoin, and these whales can manipulate the price if they wish. If the price was up here at $55,000 on Thursday and all of a sudden all this negative news comes out, or FUD, fear, uncertainty, and doubt, they could sell a large amount of Bitcoin when the price is high, which shakes out other investors, especially the small retail investors like you and I. And with further selling, these can trigger liquidations of those speculating on the price of Bitcoin, that is, those going long on Bitcoin, thus resulting in a cascading effect in price. Once the price bottoms out, these whales scoop up Bitcoin at a cheaper price, they buy low, than they originally sold it and are in profit, while the weak hands have less Bitcoin in their portfolio. When there's blood in the streets, as it was on Thursday when the price of Bitcoin dropped rapidly, a good adage to follow is, when in doubt, zoom out. As Digital Asset News tweeted, did Bitcoin or any cryptocurrency fundamentally change yesterday? Was every crypto 51% hacked? Did Peter Schiff come out as Satoshi Nakamoto? No? Exactly. Zoom out. And if we zoom out of Bitcoin and look over the 180 days, we see that Bitcoin is continuing to go up. It's retested a previous mark, and we'll see where it goes from there, presumably as it continues to reach its all-time high during this bull run cycle. So just to summarize, yes, Bitcoin took a hit on Thursday and the price is down. So as an investor in Bitcoin and other digital assets, I didn't panic. I've left everything where it is, and I can't give you financial advice, but some people would say this is a great time if you had some extra money on the sidelines to put some money towards those assets that you have been investing in. Next, I want to dive into the current state of inflation here in Canada. Doing a quick Google search, it says the Bank of Canada aims to keep inflation at the 2% midpoint of an inflation-controlled target range of 1 to 3%. The inflation target is expressed as the year-over-year increase in the Total Consumer Price Index, or the CPI. But this article from Reuters says Canadian annual inflation rate doubles as central bank sees faster growth. It says Canada's annual inflation rate doubled to 2.2% in March, as the central bank signaled economic slack would likely be absorbed earlier than it had previously forecasted. Then it goes on to say that we're a little bit ahead of schedule. The Bank of Canada said it would be 2023 before the inflation returned sustainably to the 2% target. So it seems inflation is rising quicker than expected. Another concerning note regarding the Canadian economy is the fact that right now the economy is primarily propped up by the Canadian real estate market. This was identified quite well by Steve Saretsky, a Vancouver realtor who does a weekly YouTube channel, where he dove into how the economy is propped up by the real estate market. I will add his link down below, but I'm going to play a little portion of his video right now.
What you need to understand is since the first quarter of 2018, 46% of nominal GDP growth has been derived from residential investment. Okay, so Canadian housing is the economy. Now, again, don't shoot the messenger. That is a statistical fact. This is your answer. So when you had all these politicians, everyone's saying, oh, we need to do something about housing. Okay, yeah, sure, we probably do, but we're not going to, because this is how the system works, okay? And the system is dictated by those at the top, okay? They're the ones that make the policies. So while it would certainly be nice to come in and reform housing and make housing affordable for everybody, the reality is that's not how the system works.
So if this is the case, the Canadian government cannot raise interest rates to curb inflation, because if they raise interest rates, that will kill the housing market, which will kill the economy. So this is all concerning from the point of view of where inflation might be headed. Another video I wish to share with you is of Pierre Poilievre, a conservative MP in the House of Commons, and no matter what political party you affiliate with, he gives a great history lesson on inflation and where the Canadian economy may be headed. I will add the link down below, but watch this portion just to get a feel of what he has to say.
And what's interesting about the Bank of Canada is I asked about the core rate of inflation when the governor of the bank appeared at the Finance Committee not so long ago. And he said, well, don't worry about core inflation. We only worry about CPI. Well, I'll tell you something. I have a prediction. This month, CPI will be way above the 2% target. And I make another prediction. that the Bank of Canada will suddenly say, oh, don't worry about CPI, we use core inflation. So whatever is lowest is the measurement that they use. But here's the consequence of all of these numbers. When governments print money, they drive up the price of two things. One, the things that the rich own. And two, the things that everyone else buys. So if you are a millionaire mansion owner, you're getting extremely rich. Your house is making a lot more money than you are. You're sitting in your rocking chair and cash is just falling out of your attic on your head. But if you are a working class person who rents in order to have a roof overhead, your rent is going up, your food is going up, your gas is going up, everything you buy is going up, except your wages are not, and guess what? That dream of owning a house, it's getting further and further away because of asset price inflation.
So I think that snippet shows kind of the state of where Canada's at with the printing of money, and we're not the only country. Many countries are doing this, including the United States. And this tweet, although American, and I would argue that it's very similar here in Canada, that the price of many commodities have increased in value substantially, hence showing that inflation is affecting the things that you and I buy every day. So if the inflation rate is going to be 2% or higher, how are people going to get their hard-earned money to earn more than 2% per year? I argue digital assets, particularly Bitcoin and Ethereum. Of course, this is not financial advice. Do your own research. But I am looking at these digital assets as a way to hedge the inflation of my dollar. I do have to ask myself, am I drinking the Kool-Aid that all the crypto proponents are speaking? And I probably am, but I think I have good evidence for it. As I have already mentioned, the current market cap of Bitcoin is about $1 trillion, and if that's the case, it would be the sixth largest company in market cap ahead of Facebook, or a 1/10 market cap of gold, and just behind silver with a $1.4 trillion market cap. Historically, Bitcoin has followed a cycle based on the Bitcoin halving cycle, which I've mentioned before in other videos, so it seems to be doing what it is supposed to be doing in this bull run as it makes its way to a new all-time high. It has been said by many that Bitcoin is in a bubble, but I don't think that's true anymore. I do not think Bitcoin is going to go to zero anytime soon. Bitcoin has been the best performing asset for the past decade, and since 2011, it has increased in value by 20 million%. And in this article, Goldman Sachs, one of the largest banks in the United States, adds Bitcoin to its year-to-date returns report. And as we can see in this chart, Bitcoin is outperforming every other asset class. It says, as seen in the above graph, the giant investment bank has included the cryptocurrency in its year-to-date absolute and risk-adjusted returns. Bitcoin leads in both. And down here, why is this big news? Goldman was among the most vocal bashers of Bitcoin and the entire industry. The bank initially started a crypto trading desk in 2017, halted it a year later, and then reinstated it in 2021. Not only are the big banks getting back into crypto, or even into crypto for the first time, other big players in the financial environment are getting into crypto. As this article states, former comptroller of the currency in the United States, Brian Brooks, leads Binance US trading platform. A former top regulator and acting head of the US comptroller of the currency, Brian Brooks has been appointed the CEO of crypto exchange Binance US. Brooks will lead the exchange on May 1st and replace the company's current lead, Catherine Colley. And Bitcoin continues to be recognized as a store of value. As this article states, Federal Reserve Bank President says Bitcoin is clearly a store of value. The Federal Reserve Bank of Dallas president says Bitcoin is clearly a store of value, emphasizing the differences between cryptocurrencies like Bitcoin and central bank digital currencies. He said the latter won't necessarily be a store of value. Of course, there are many opponents to cryptocurrencies. As this article states, the author of Black Swan, Nissim Taleb, advises to stay out of Bitcoin, citing no link to inflation or anything economic. The famous author of The Black Swan says investors should not buy Bitcoin. To hedge against the current turbulent market, he advises buying stocks or real estate, emphasizing that Bitcoin has no connection to inflation or anything economic. But there's other famous authors, like Robert Kiyosaki, author of Rich Dad Poor Dad, who often tweets regarding Bitcoin, such as this: "Why I like gold, silver, Bitcoin? Liquidity. People rush in to buy a house at top of a real estate market. When real estate crashes, cannot get out. Real estate not liquid. I own 8,000 rental properties, bought during crashes. In 2021, I prefer liquidity of gold, silver, and Bitcoin." But like so many, I think digital assets are a way to hedge against inflation, and I will continue to diversify my portfolio and invest in such. But besides digital assets, there are other investments that could be invested in. It's not financial advice, but precious metals such as gold and silver and real estate are suggested ways to hedge against inflation. Mike Maloney and Frank Gustra are two proponents of precious metals. Both have YouTube videos, and I will add links to their videos down below. And to note, Frank is a Canadian investor. But Mike Mahoney also created a video series called The Hidden Secrets of Money. And I encourage you to give this series a view, and I'll include the links down below. Real estate, as I mentioned, could also be a hedge against inflation. Nissim Taleb suggests real estate is a good investment option, as does Barbara Corcoran from Shark Tank, who advocates getting rich by investing in real estate, not cryptocurrencies. I find this interesting, though, that some very wealthy people are encouraging you to get rich by investing in real estate. But real estate is hard to get into. You need a large amount of capital for a down payment. So buying cryptocurrencies at a dollar cost average is a much more economic way for the average Joe to hedge against inflation. So that brings me to the end of this video. I intended to just show you what happened with Bitcoin this week and then identify some of the concerns regarding inflation here in Canada and around the world and ways to hedge your bet against such inflation. I propose, not a financial advisor, that digital assets is one way that you can hedge your bet. So thanks again for watching, and I hope to see you in the next one.